Bad debts in income tax has been a contentious subject, even though income tax provision says that deduction will be allowed for amount shown as irrecoverable in the books of taxpayer. Time and again income tax officials insist to prove that in fact bad debts were irrecoverable. Before we come to any conclusion, let's look at the provision of Income Tax Act. Section 36 allows for deduction on account of bad debt provided it is written off as irrecoverable in the accounts of the assessee for the previous year. To claim this deduction, certain conditions have to be fulfilled, which are: A. Bad debts can be allowed only as deduction when such amount has been shown as income previously. B. Bad debts will be only allowed for the amount not recovered in case there is partial recovery of the original debt. From the above provision is quite clear that amount shown as bad debt in books should be allowed as deduction. This view has been upheld in various cases. Taking into account all the various judgments, Department issued a circular in 2016 instructing all the officials not to pursue the cases where the assessors are not able to produce evidence when the amount has been shown as bad debts. In this regard, there are other questions such as whether provision for bad debts is allowed as deduction. Provision for bad debts is not allowed as deduction except for banks and financial institutions. Whether advance or loan given written off will be allowed as bad debts. The bad debts can be only allowed as deduction only when such amount has been shown as income. If any advance is given, but not recovered, then in such case there is no allowance.